Hello, everyone, and welcome to another episode of Connecting the Dots. I'm here today with Gastón Irigoyen. Extremely excited about this one. We've been collaborating for a little bit of time, posted quite a bit about Pomelo. Gastón is the founder and CEO of the company. Extremely ambitious card infrastructure platform out of LATAM. Obviously, you raised the Series C as well. Today we'll unpack the next generation of cards, what that means, right? I think you're the expert here, so we'll touch on that. Why LATAM is a strategic launchpad. The evolution of the credit card platforms. I think there is a lot of different kinds, and so what does that mean? AI and stablecoins, the two buzzwords of the industry. So let's touch on those two, and what the future of programmable fintechs looks like. So maybe before we get started, Gastón, mic is yours. I'll let you introduce yourself. Tell us a little bit more about you and about Pomelo.
Hey, Arthur. How are you? Great to be here. Thanks for having me in the show. I've been looking forward to this one for quite some time. As you said, Gastón, founder and CEO of Pomelo. We're a payments infrastructure company out of LATAM, about 5 years old, over $160 million raised in venture capital, about 170 customers throughout the region, and expanding pretty rapidly. So looking forward to chatting further.
So I guess what I tend to ask or get asked by my parents, my grandparents, and everyone around is, okay, I know nothing about payments. How do you explain to me what you do? So can you potentially do that for me? What does a credit card platform really mean? What does it entail? What do you guys really do? Maybe if you can explain it to me in as if I was a kid, that would be extremely helpful.
Yeah, of course. Well, you obviously make card payments. You just moved to New York, so you're probably swiping the card or doing a lot of contactless. And hopefully your grandma, there you go with your phone, and hopefully your grandma uses her card as well. So essentially everything that happens in the back end to make that transaction possible is what we do. People don't even realize because they're very much used to going to the shop or buying online. And most of the times the transactions go through, sometimes they don't. But anyways, there's a whole bunch of things that happen in the back end, all the way from being able to issue that card to effectively, get the payment through and the purchase, in place. And lastly, the money over to the merchant. So a lot of the things that happen there in the back end is what Pomelo does. So we power a lot of financial institutions, fintechs, and really any company that wants to embed financial services or launch a card business. We help them with that, and we've been focused on doing that in Latin America over the last 5 years.
I might be able to bring you a few clients. We should probably talk about that later. But as a founder, I have the utmost respect for any founder for many reasons. You don't choose the easy path. You decide to take on the hard path, the one that's has uncertainty, the one that you don't necessarily know what's next. When you look back, I was talking with some friends about it yesterday, everything kind of makes sense, right? You can piece out the story, you can create a story, but when you look forward, and honestly, especially at the beginning, you don't really know. What tends to be the common ground is obsession over a singular problem. What was that problem for you whenever you started Pomelo? What made you start it? What was your obsession?
Yeah, so it was a problem that we knew very well. We had been building neobanks in Latin America. We had different experiences here. So we had been doing FinTech in LATAM for quite some time. And this was basically the largest problem that we suffered from when doing those B2C FinTech companies. So essentially, the thesis behind Pomelo is very much driven by our own frustration and by all the friction that we went through over the years. And so that was basically the biggest motivation. We've been, building now for about 5 years a platform that we would have loved to consume back in the day when building those neobanks. And today, lots of Latin American companies or global companies that want to do business in Latin America want to offer financial services and card payments and other digital payment rails throughout the region without having to go, market after market, integrating with local incumbent players. That has been basically the status quo of the industry. And that's where we're useful. That's our core value prop. And we're very proud of what we have done thus far. When we first started, and even in those previous experiences that I mentioned, it would take us literally 15 months to be able to launch a prepaid card, no business rules, just a balance and a card against it. And today we have some customers that have integrated Pomelo and put cards live and transacting within 4 days. at a regional level. So it's been quite an improvement. So yeah, really excited about what we have done, and more importantly about what's coming up next.
You said other digital rails, and my spidey senses just moved, and I think that's a topic we'll touch on a little later. But a lot of the things that we see in the card business, the cards are not new. They've been around, right? Like, I think everything that I've seen and learned about Pomelo, because I have to do some research, of course, is it's kind of next generation. What does that mean? What is the next generation, right? Is it the infrastructure modernization? Is it the embedded finance component that you mentioned, right, with your massive trend on that front? But I didn't know that actually cards platforms were going to be also offering some. You have credit innovation or global scalability. Like, what is it? What makes the next generation of card platforms and cards?
Well, pretty much you answered the question already. I think it's all of the above and a few other things. To put it like in very simple terms, as you know, like this region and many other emerging markets around the world have been very much cash based for quite some time. Fortunately, today the card penetration in Latin America is very widespread and has been growing rapidly. But to your point, I mean, there's also other rails, right? The way we think about it is that there's the analog rail, cash still there, and a pretty significant, chunk, obviously losing market share, which is positive, but it will continue to be there for quite some time. And I would say now we have like 3 digital rails, cards being one, but then there's also the emergence of real-time payments. Obviously, the example of Pix in Brazil is very well known globally, but every single market and country and central bank is, pushing their own. So I think in a few years' time, what we have seen in Brazil is going to be pretty common throughout the region. And then, of course, stablecoins emerging more and more as a rail per se, right? So we already live kind of in a multi-rail present with cards, real-time payments, and stablecoins. Obviously, they compete against each other, but they also found and are in the process of finding the right use cases for each technology. So I think they will continue to coexist and compete, and in some ways also collaborate over the years to come. And so I think our job here is to provide that sort of infrastructure at a regional level for companies and customers that want to expand and offer multiple geos and multiple rails. And then, of course, credit products on top of that. Something that a lot of people don't know is that we have like a lending product, like a core lending management system that allows our customers to offer credit and run a lending business with the end user, and they are able to do that across geos, and now as we look forward across multiple rails and not just the cards rail. So there's a lot of infrastructure modernization which the region has been needing for quite some time, but it's also supporting about this this new rails and these new use cases. And we'll start looking beyond Latin America as well as we package some global products, but we can deep dive into that later.
Yeah, so like 2 questions that popped in mind whenever you were talking. You talked about 3 different rails, right? And let's say you issue a card. Does the card have to run on one of those rails, or can it potentially be running on the 3 depending on what you guys do? Like how would that work?
So technically there are 3 different rails. The card rails are typically and historically owned by the networks, so Visa, MasterCard, American Express, and a few others. Real-time payments, it's technically sort of owned by governments and central banks. So the example of Brazil is very, very clear. And then stablecoins have like a completely different governance, right? So technically we're talking about 3 different rails, and so a payment would flow in one rail or the other. However, we're starting to see some, collaboration or relationship between them. So for instance, more and more we're starting to see cards that can be settled in stablecoins, right? So there you have kind of a merger of both things. You're still using the cards network and the cards rail, but you're bringing the stablecoin element into it, and you're settling that transaction or the sum of the daily transactions with stablecoins. So for instance, if you think about native stablecoin banks that have been emerging over the last few years, the advantage for them is that to settle their users' transactions on a daily basis, they don't have to buy dollars or local currency. They just can do it with USDC or stablecoin altogether. That has been, now accepted by Visa and MasterCard on a testing phase, but going through more kind of global rollouts. And so that brings some efficiencies, and you start to see a little bit of the combination of both. But as I pointed out before, technically, those were kind of card transactions that are being settled with stablecoin.
So the card would run on one rail per payment, but can the same card potentially do one payment on one single rail, which is the traditional one, and then the next one be actually done or settled in stables? Is that like a use case that's actually doable today, or not exactly?
Yeah, I think we're going to start seeing more and more of those. So for instance, something that interesting that's starting to happen is that the card transactions are then sort of printed on chain. So whatever's happening in the card network and the card rail, it's also going on chain. So you then have the sort of traceability, and you can start building a lot of value on top of that. So I think, yes, we'll start seeing more and more of those use cases moving forward. Obviously, it gives users optionality, and there's more sort of value prop out there in the market. To that point, I think something else that we've started to see and we're working on is the ability for our customers to give their customers, so the users, a credit line that can be executed across rails. So for instance, if I give you, $1,000 worth of, credit, you would then have different payment methods, and you could use $500, to do card transactions, and then maybe like $300 to do PIX transactions, and maybe $200 to do, some sort of, stablecoin transaction. So basically, you can use that credit line as you wish. So I think we're going to start seeing more and more of that. At the end of the day, as a user, you benefit from the same credit line, but then you also have the optionality to make the payments and to consume the line using these different rates and technologies.
Yeah, and also making it a lot more global, in essence.
Yeah, of course.
So that's actually really cool. And then the second question that popped in mind when we were talking is, you talked about potentially settling in stables. I've been diving deeper into that space, digital assets and everything else, and it's a keyword, right? Like the two trends, and we'll talk about them later, stables and AI. Those are like the two that we're seeing. They have different use cases. What would you say is the primary use case for, a card or transaction to be settled in stables? I'm guessing you're in Argentina right now. Like I have one that comes to mind. That's obvious, currency volatility, so it might make sense, but you're the experts. You've seen more than I have. What would you say is kind of the number one and two best use cases for set?
So, okay, there's a couple of things here. First of all, I think we first need to make a sort of a distinction between local cards and what's now known as global cards. So local cards are the traditional ones. You would use them to go, to the supermarket, do your groceries. And those make sense to be, in your local currency. You don't want to go, to the supermarket in Argentina and pay in American dollars. It doesn't make sense. You just want to pay in local currency. It turns out to be, not cheaper, really. It's more expensive if you do it like in a different currency. So it is what it has to be, really. But then on top of that, you also make sure that the acceptance piece is working well, so you don't have, transactions being rejected and so on and so forth. So basically, what people are used to that are mostly local transactions, I think those should continue to be done with local cards for the most part. Of course, if you're traveling, then you go to the supermarket and you might as well do an international transaction, a cross-border, payment. But that's not, what it was born for. And so now in recent years, we've started to see this idea of the global card, that are cards denominated in American dollars or more and more in stable coins. So they are natively, in hard currency. And those have found some interesting use cases. So for instance, digital nomads that, get paid in American dollars and have some sort of virtual account, then use a card against that balance. And yes, they would use it for the supermarket. Doesn't matter if it's in Argentina, in the US, or somewhere else around the world. But those are effectively denominated in dollars or in USDC, right? So I think, different cards have different use cases, the same way, debit has a different use case from credit, right? Having said that, what's the benefit of the global cards or the stablecoin native cards? Well, for some businesses, they end up having better economics. So for instance, if I'm a stablecoin native neobank or bank, and I hold my treasury in stablecoins, right? and I can settle in stablecoins, then I don't have to pay the FX to go to dollars to pay Visa or MasterCard, right? And if my user effectively has digital dollars, then it's one-to-one because the user has digital dollars, I have my treasury in digital dollars, I'm paying Visa, MasterCard in digital dollars, so there's no FX on that sort of settlement. On top of that, if I have my treasury in stablecoins, then I have some investment options that might be different from the ones in fiat. I might get like better yields, better returns, and then I can return a little bit of that to my user in the form of a cashback or some sort of discount or a loyalty program or whatever that may be. So essentially, we're starting to see, this entire sort of ecosystem or players that where they are trying to do everything natively within, the stablecoins sort of ecosystem. And they benefit from better economics or some other sort of efficiencies that are mostly seen in the backend and that then are translated to their users. But I don't think those are necessarily going to be sort of the new default and the new normal. I think those are good for some use cases. And what we're seeing more and more is that the fintechs tend to offer both a global card and a local card, and so the user can use one or the other based on what's more convenient at the time of purchase.
Yeah, as you were talking, airlines. Like I'm a nomad, right? I think last year I took like 110 or 115 flights. So like a card like this could be really, really useful to me, and especially with neobanks. I think neobanks themselves have a strong use case, as you said, but airlines as well, right? And for one reason, I think what you're mentioning is really bridging the best capabilities of what we call the traditional models and the best capabilities of what the new models and the new potential stack is going to be offering with one single card or one single product, which is really cool. And the second is, what I'm hearing is the more global a business, and so their consumers will be, the more use cases will most likely be offered, and the consumers will be able to benefit from them. So yeah, given me a few ideas. Hopefully the audience will think the same. One last question on that front, which you partly answered, but I wanted to see if you wanted to add anything else. Traditional card schemes, right, like issuing specifically, is banks plus processor plus scheme, right? Would you say that's going to change with what we're seeing right now and what you're talking about in terms of stack and the three different rails and everything else? Do you think they'll remain the same?
So I think, just to put things in perspective, what's happening is as we have more and more tech and rails emerging and use cases being born and establishing themselves, each one of these technologies finds or becomes superior at serving some of those use cases, right? So for instance, in a B2B sort of use case, if a company has to move money from one market to the other, stable coins could be like a very good option. They're probably not going to use like PIX to move money from, Argentina to Germany or from Japan to Brazil or something like that, right? So the point being is that as with everything else, different technologies and different use cases are better served, in different ways. And so I think we're going to a world that is going to have more options and more efficiencies. But I don't think in the decades to come, one network or one rail will, beat absolutely everything else. If anything, companies and people will have more options, and we'll have to learn, what payment method we should use or what technology we should use in one transaction or the other. So from that perspective, I think, the cards network will continue to evolve, and the same way they didn't, allow settlement in stablecoins in the past. Now they recognize that they have to do it because otherwise they will start losing some use cases and some customers. So they will continue to evolve. Also, like we had no tokenization, a few years back. Now we have tokenization, and you pointed out to your phone, and you're probably, just making like, payments with your phone while living in the US, or if you travel around Europe, you are basically just using your phone. So I think that's kind of the evolution that we will continue to see. We'll start seeing more of the agentic commerce. Of course, that has been another buzzword. So now sort of tokenization is coming into agents. So the same way we tokenize a card in a phone, will start doing the exact same thing within an agent. So you're going to give, the card to your agent, and you're going to set some parameters, and, the agent is going to make some purchases for you. So, it will continue to evolve, obviously at a faster pace than what we have seen up until now. But the card networks, are in the business of defending their own networks, and continuing to build defensibility around them. They are facing more competition than ever. There's probably going to be some price compression there because some of the newer rails are more cost efficient or more effective in different ways, and they will have to adapt to that. But I do, strongly believe that we will continue to see like very clear rails with different governance, and they will serve different purposes.
Yeah, I don't foresee, like, everyone is talking about the stablecoin rails, the new rails like RTP being a competitive product to what they've built, where, I think, when you're in payments, and I'm lucky on that front, like, you get to talk to a lot of people, and talking to the schemes, right? Like, they're adopting the technology. Instead of seeing it as something competitive, they're enhancing their products, creating new ones, and making sure that all the benefits from those rails are also embedded in what they're currently building. So I'm fully aligned with you that, the schemes, when you have 50% plus market share, or not market share per se, but like profit margins, it's kind of hard, right? Not to build what you need to build and stay relevant and competitive. So I think they have the upper hand on that front. But again, like, reminding myself sometimes that, and hopefully the audience does too, that without them, there's no global payments, right? They've created the connectivity in between the banks, and they will create it in between wallets. And I think, like, looking at LATAM, right, like, they'll most likely also create it across parent methods. And so one of the things I wanted to get back to in terms of like the journey of Pomelo is you started in LATAM. Why is that?
So just to wrap up the previous point, there is, of course, competition. If you look at, debit in Brazil against Pix, Pix has clearly, eaten, a good chunk of their pie. But when it comes to credit, the cards are still like very, very superior to Pix, and so on and so forth. So yeah, at the end of the day, like, there's going to be more competition, but the good thing is that, more competition and more optionality requires more infrastructure, and it gives users and companies more choice, and, we should all benefit from that. Apart from that, I think, we started in LATAM because we have been building FinTech in LATAM, and because we believe that LATAM, same as, every other region around the world, but most importantly, like the developing markets, have the biggest gap in terms of financial services. We suffered from this problem in LATAM, as I described before. If you look at LATAM as a whole, is the third largest economy after the US and China, even bigger than India, and more businesses, are being built regional or global. There's 20 plus countries in the region, every single one of them with different sort of regulation. Like LATAM will never have something like a European Central Bank or anywhere near that. So the amount of complexity that you have to deal with to be able to provide financial services at a regional level is just like incredibly hard and super frustrating. So part of what we do is, solving for that. We solve a lot of the regulatory part, the compliance part, the operational part. And ultimately, when we offer financial services infrastructure, all of that comes within it, and removes a lot of the friction for companies that want to scale really fast through all, these markets. Because ultimately, some markets are larger, some others are more interesting for different reasons. But the way in which, credit works in Brazil is very different from Mexico, very different from Chile, and so on and so forth. By sort of leveling the playing field and taking on all of that heavy lifting and being able to deliver value without the customer even noticing whether they are doing one country or the other, because everything is sort of solved in their integration with Pomelo, is of a huge amount of value. Okay, and I think that's what allowed us to pick up a lot of product market fit and traction early on. I mean, we had a very, very high conviction on the thesis because we had suffered from it in the past. So I think there's still a lot to be done in LATAM, and we can continue to be, centered and focused around LATAM for many, many years. However, what we started to see is that some of our LATAM customers started to ask, for our services and our infrastructure in other regions around the world. And we also noticed that we started to build some product for LATAM that it's technically global product, because what we're solving for in LATAM, it's also repurposable for other regions around the world, or simply works for other regions because say you're working against card networks, that's a global standard, so you might as well develop software or product for LATAM, and you're solving for LATAM, but even without noticing, you're also solving for other regions around the world. And then, of course, there's what I mentioned about kind of the global cards and stable coins being very global and all these kind of things and trends that we've been discussing. So I think, moving forward, Pomelo will start sort of delivering some of the value that we've created for LATAM outside of LATAM and creating a little bit of a global go-to-market motion. So we have some anchor products for that already, including a global card with stable coins and tokenization as a service and chargeback management with agents and all these kind of things. So I think, now after the CVC and after 5 years, we're starting to go beyond LATAM, even though it has been our playground up until now.
Yeah, it's almost like a new growth phase, which is going to be really interesting. I think different use cases, different products. I think as you speak, I have like 15 questions that I wish I could just do a brain drop on the side, but I just got back from Brazil. I was there, multiple reasons. One of them was digital assets, and the other one was Carnival. Told myself I was going to experience it, and it's true. Like, I think, we don't think about the complexity really behind, being able to take a card to a different country and being able to pay there. It's crazy. Like, I think the amount of regulations, and I agree with you. I'm pro LATAM. Like, I speak Spanish as well. We could have done that in Spanish, but I think we might have made a lot of the audience happy, but also a lot of the audience unhappy. So maybe English is better. But I'm just realizing it myself now, right? Like, I've traveled to Mexico. I was in Peru, Ventisi Data. I was in Brazil like before, and I'm seeing it like with the portfolio of cards that I have. And yes, I honestly don't even carry my cards on myself anymore, right? I think when IDs become fully digital, why do you even have a wallet, right? But I was going everywhere and paying, but the reality of it is, I think nobody can really understand the complexity that what's happening actually behind to create those products that can be cards that you're mentioning that can actually be used in different regions. So maybe one day people get to shadow you and see a little bit more what's happening behind the scenes. When we talk about that complexity, right, what do you think was the hardest part early on that you had to face, right, in creating kind of that product first for LATAM? But I'm guessing your vision was always, let's not create just a card that can be used in Argentina. Let's also create a card that can be used in Mexico. So I'm going to pause there. What would you say was the hardest part?
So I think we did something that is kind of rather unconventional in the startup world, which is, on the back of our seed round, we went straight to 6 markets. So we didn't launch in one market, as people typically do.
The one thing that people say do not do.
Exactly. That's it.
You're like, let's go to different markets.
That's exactly what we did. So yeah, typically, the startup playbook is, launch just one small product that solves a big problem in one market, or even like a sub market, and then if you pick up traction on the back of the following round, or 2 or 3 rounds down the line, you start expanding. We did something completely different. We went straight to 6 markets, and the reason for that is that we had suffered from the problem, as I described before. We knew that the fastest growing companies in LATAM or global companies coming to LATAM were looking for regional partners, because they had to solve one problem on market on a standalone basis, and a second market on a standalone basis. But most importantly, they were looking for like a regional partner to help them expand rapidly, right? So we had very, very high conviction on that side of things, and that was kind of intrinsic and core to our thesis, and that's why we made that sort of bold decision. Having said that, being a regional company or being a global company in financial services, being regulated and with all the different nuances that exist market after market, there's no such thing as a regional value prop. It's not that you are building like a regional layer of abstraction and value for your customers. and not even like a global one if you're thinking about a global company. In financial services, that's required, but that's not enough. You also have to go very deep down into each of the markets and do a lot of tropicalization, right? Because as I mentioned before, like the way in which a credit card works in Mexico is different from Chile, is different from Brazil, is different from Argentina. So you really need to crack and understand how it works locally and create value and differentiation with incumbents locally. So you have to be better locally in any given product, any given market. And then you can wrap all those different sort of value props into a regional value prop. So ultimately what I'm saying is that the regional value prop is the sum of all those very local and superior value props. And that's how you deliver value at a regional level. And that was exactly the most, complex and continues to be the most difficult part of the business. Even if you think about, roadmap prioritization on a quarterly basis, that's always the toughest discussion within the company because there's so many things that can be done for different customers, for different rails, different markets, different products, that becomes always the most difficult and challenging part of the equation. Ultimately, the good thing about it is that if we're developing, a very specific credit card product for a customer in Brazil, that's also contributing to the regional assets because a good chunk of that can be repurposed for a similar customer in Mexico. So it's not that we have to go and build everything from scratch. So absolutely, like every single piece of product, code, modules, technology that we're building for one market can be in many ways and to a large extent, reutilized in other places. So everything is contributing to the central asset and to the regional or global value prop. But yeah, that's the trickiest part.
Ruthless prioritization and balancing, having a vision, the new trends that are coming, what customers are asking for, what the big customers are asking for, what the masses is asking for.
No, and I mean to that note or on that point, it's a B2B business, right? So it's important not only to have like a very high conviction and clear vision in terms of what you want to do, but that has to be merged with some very important customers. So the customers that you think are going to be most beneficial for the company and that can you grow with, right? And sometimes you come across customers that are extremely innovative and it's super interesting what they're doing, but it's going to take many years before what they're doing becomes mainstream. And it's actually a better business to work with customers that are probably like all not that innovative or that are picking up on a trend that has been playing out for 2 or 3 years, because that's where you can build like a sort of a bigger business. So that adds like another layer of complexity. So you're not only looking at products and markets and logos, you're also looking at the chances or the probability of whatever product you're building being adopted sort of repeatedly. So that you have like a scalable go-to-market motion.
Yeah, you don't build a product for one customer in general. Rarely. Maybe in Amazon. Maybe you think about it at that point, or a Meta. But yeah. Well, sounds like you're doing a lot. You expanded to 6 different regions whenever you raised the seed. You guys just announced the Series C. What's going on? Are you going? How many regions are you attacking this time? What are you going to do with this capital? How do you plan on using it strategically and growing?
Listen, it's interesting. More capital and a new round didn't necessarily mean more markets for us in the past. So just to complete that story, like with the seed round, we went to 6 markets, and then we raised 3 more rounds without going to any new market, just going deeper into each one of those markets. Today, we operate in 8 markets, so we expanded to 2 more on the back of some customers that, asked us to go to new geos. So that brought us from 6 to 8. But actually, for several years, and despite raising additional rounds, we didn't necessarily go to more markets. We were in the business of, going deep into each one of the markets where we had been operating and crafting a better and better value prop and working on the regional value prop. I think now we're going to start seeing like a new phase and a new push towards more of a global value prop on the back of the global card. A global card, in the terms that we were describing before, it can be denominated in dollars or in stable coins. So we already sort of have both. And that product can serve, customers pretty much all around the world and their own customers. So the end user can be a citizen of pretty much any country around the world. So from that perspective, yes, we're now going from 8 markets to, hundreds of markets on the back of that product. But at the same time, we want to continue to serve LATAM customers with local cards, whether it's, credit, debit, prepaid, corporate, that solve for actual sort of local needs. So I think we'll start having this combination of local products and global products, as well as some other, technology that can be consumed both locally or regionally and globally. So that's definitely something sort of new. And the other thing is that we'll start going sort of multi-rate, right? We have been very much cards-centric company now, and I think we want to start tapping into these other rates that we have been discussing so that it becomes like a wider, more compelling value prop, so that now we can serve more use cases and more customers, and we can deliver more value to them, whether it's in LATAM or outside of LATAM.
When you say multi-rail, what do you mean? What are some of the potential new products? If you can discuss and disclose, but what are some of the new products that they're going to be launching?
If you look at, for instance, the neobanks or the FIs or any other sort of company doing financial services in LATAM, the same way they offer cards, they obviously have an account, and they tend to offer also, payments. If you go to Brazil through Pix, as you probably experienced, but even Pix is now being incorporated into wallets and accounts, say in Argentina, because a lot of Argentinians go on vacation to Brazil and they have to have, Pix to be able to pay. So ultimately what I'm saying is like, anyone doing financial services needs an account, needs different payment rails, right? As well as other, services like bill payments and so on and so forth. And then more often than not, they also need multiple geos, right? So I think ultimately, like Pomelo's value prop will continue to be about serving customers that need or want to have a presence in the region. Now, if you can add sort of the global vector, and it's not only about delivering value within the cards rate, but also several other rates, right? So some of our Asian customers or European customers or American customers that come to LATAM, they will now be able to find in Pomelo not only, a cards product across multiple geos, but also like a real-time payments product across multiple geos. So they don't have to go market after market searching for, an incumbent vendor to, provide them with each one of these services locally. So they can sort of consolidate the entire region with us. And that's a lot more value than simply being focused around cards.
When your partners, right? I prefer the word partner to clients, but when your partners ultimately are coming to you and looking at Pomelo, would you say Pomelo is a local champion, or is it more of a global infrastructure layer?
I mean, quite frankly and objectively, for now, we are a regional player. I wouldn't say we're. Of course, we're local in each one of the countries where we operate in Latin America, so we can deliver a very local value prop. Whether it's a corporate card in Mexico, a credit card in Brazil, a prepaid card in Chile. On top of that, we are a regional player, very well established in the region, and working with some of the fastest growing, fintechs and tech companies at a regional level, as well as, FIs and other players in the entire region. And I think we're starting to build some vectors that will, make of Pomelo more of a global company. I wouldn't say we're there yet. That's, some of the things that we're incubating. So if anything, we are, in the process of going from like local to regional to global, if that makes sense. But at the same time, even if you're a global company in financial services, as we've been discussing, it's very, very important to be extremely local, right? You're not going to be able to sign, new partners locally in any given market unless your value prop is absolutely the best one in that particular market.
We've been talking about local player versus global, helping your partners obviously like have different rails access, have access to different countries as well. In terms of the current credit card platform that you guys have built and enhancing it, I'm guessing better underwriting, better risk models, better intelligence. what is the focus going to be in terms of enhancement on the platform? What are your partners asking for right now?
So first of all, they are asking for modern products. If you walk into one of the buildings of any FI in any capital city in Latin America, and you go to the floor where they manage the credit card business, you will still today see black and green screens, right? So they're using software from like 3 or 4 decades ago to run these credit card programs, right? And if you think about it, that's competing against like the new banks of this world that obviously have, significantly better technology, right? So there's a lot of digital transformation and modernization going on. So that's, even if it sounds like very basic, that's the first thing that, our partners and customers are asking for. They're asking for new, better ways to manage the business, right? It's not an easy business. You have to be very good at scoring, underwriting, and so on and so forth. And we're living in 2026, and it makes no sense to serve that business with technology from 30, 40, 50 years ago, which is literally what's happening. So that's the first thing. The second thing is supporting new and modern use cases. Or to be honest with you, sometimes it's not even about modern use cases or modern products. It's about just like modernizing existing products. And we have seen this with corporate cards. So the banks and traditional FIs have used the same corporate credit card product for ages. They never sort of prioritized it, most of the banks anyway, because they've been very much focused on their retail business. And as you know, in recent years, like companies like Ramp and the Ramps of LATAM and any other region around the world started to emerge, and that it's obviously like a threat for more traditional banks and FIs. So they're trying to revamp those programs. So this is like a version 2 or version 3 or whatever of their corporate card offering, right? So it's a use case that has existed for a long time, but now they need to revamp it to compete against global companies. Then on top of that, you have modern use cases, right? Remittances cards, for instance, or crypto cards, or now stablecoin cards. So there's new use cases being sort of built or going digital, such as remittances that used to be like pretty much sort of analog, and now they're being digitized and modernized. So that's also something that they're looking for. And all of this is powered by our loan management system, or the lending core platform that we have built, that allows them to do that across geographies and across use cases. So it's about continuing to improve that, because ultimately, you want to help your customers and your partners run profitable businesses. And as you know, in financial services, profitability comes through credit, loans, insurance. Many of the other products don't really generate much revenue. They generate engagement, but you ultimately monetize with these ones, and that's exactly why this product is so powerful.
That's very interesting. Yeah, there's going after new customers, enhancing your customer base and growing it, right? That's one way, of course, generating more revenue. But the second one is providing better services, a better value, right, to the existing customers that you have, and obviously, like for each. In a B2B business, for each client that you sign, how can you make sure to provide more value so that the account grows, so that it's not just about new, it's also about existing and scaling this? I think we've touched on many different things, and what I'm realizing more and more is Pomelo is not just a credit card platform per se. It's really like a full fintech with financial services also being offered, and I think you're talking about the emergence of that and things that you've built that extremely interesting. There's 2 obvious trends that continuously emerge. You seem to be on the innovative side of the spectrum when you look at fintechs. One is AI, the second one is stables. AI being both AI itself as well as agentic, right? Also another buzzword. I think at some point in time, I just came back from MAG. I was in San Diego after Brazil. And I think 5 or 6 people, I did a panel with United and LVMH and a few others, and it was about agentic, and people were like, if I hear one more thing about agentic, I might just, and I was like, okay, maybe I'll change the topic next time. But when you zoom in into AI in general, agentic plus AI, right? Let's start there. How do you think AI will change, the card industry specifically and what you're building? How are you guys adopting it?
So, first of all, I think it's interesting. I think some of the buzzwords that everyone is using today, will end up being just part of normal life in the future, and some others will, fade out and go away. I always like the example of, the card tokenized into your Apple Watch. There's, have you ever seen someone paying with their watch?
I have, but I lived in San Francisco. But candidly, super rarely. Like even with an Apple Watch, people still use their phone, for example. So I agree with you.
Exactly. So the point being is that, sometimes the technology is available and you can, put your card on your watch, but simply doesn't pick up traction or enough traction, and then it fades out. And even though it's a cool technology, it doesn't go mainstream, right? So I think, there's obviously way too many buzzwords going on right now. We'll see which ones end up picking up traction and end up being part of normal life, and which ones sort of go away. In terms of AI, I think, it's this kind of situation that most people feel that it's very exciting on the one hand, but it's also scary on the other. And so you're thinking about how can you boost your business and take your business to the next level and leverage AI in all these different ways, but you're also scared about, potential disruption. So it's kind of both things playing out sort of simultaneously. For what it's worth, I think regulated industries are a little bit more protected. And then the fact that a lot of these payment rails are sort of managed and have very clear governance, whether it's Visa, MasterCard, or central banks, or a few other actors, also generates some defensibility around sort of the model, not so easily disrupted. Alongside the fact that, people's habits don't change as fast when it comes to managing their finances or, choosing how they pay and all these kind of things. So I think in relative terms to other industries, we are in a good position, not necessarily ideal, but in a good position. And how has Pomelo been using AI? I think, kind of three phases. I like to think about it in three phases. The first one being a lot of internal efficiency, as most people did. Just to give you an idea, over the course of the last 2 years, going from the Series B to the Series C, the business grew about 350%, and we did it with the exact same amount of people in the team. So that meant that, we found a lot of operating leverage, and now by having, people with agents and teams with agents, we became a lot more productive as a company, and we were able to grow a lot without necessarily having to scale the teams, but basically, upskilling the teams, which is, completely different. It's just like powering the teams with more tools and know-how and agents, and using AI for, to our own advantage. Kind of the second phase is using AI to be able to deliver more product faster, right? Or more product per unit of time. So today, we're shipping about 45% more code and product than a year ago, right? So if you look at our quarterly product development, plan and output, most importantly, the output is, 45% higher and better and bigger than it was a year ago. Again, with the exact same amount of, people, if you want, but powering people and workflows with AI, right? And, we're looking to scale that, continuously over time. So I would expect that next quarter, we have significantly, more output than this quarter, and so on and so forth, right? So it's about accelerating the time to value, if that makes sense, or the time in which we put product out in the market, and therefore, becoming functional to the sales process and delivering more value to our customers. And I think finally, the third sort of frontier or wave is about effectively having AI as part of the value prop in terms of what you deliver as a product. And that's probably where, agentic payments come in, right? So the same way we offer sort of tokenization as a service, then we'll do, agentic payments, and we'll start, tokenizing the cards within agents and this kind of thing. So it's the actual sort of AI being delivered as part of the value on the product. So I think we've been structuring it in those kind of 3 waves or frontiers, and excited about what's coming next.
Is there, I think what I've heard is a lot of embedding AI into both your international and operational processes, but as well as your products. One of the words that we keep hearing is agentic, right? Is there, in the agentic world, and you were talking about tokenization, are there things that you have to think about now that you didn't have to think before in terms of the products that you're trying to build? And does that, for example, reshape the card authorization logic or things that are similar to that, right? Like, are there things that you have to think about now because of the agentic, which is going to be a new channel? And I don't think people fully understand right now how big that one is. I don't know if you're available next week, for example, but I'm rallying with a group around like 300 people in San Francisco for Agentic Payments Day. If you're free, and by the way, extended invite, I'll send it to you afterwards. But yeah, really curious, because I've seen and heard what others are doing, but more so on the acquiring side, network side, wallet side, merchants. But I haven't exactly heard from anyone on the card issuing side, right? And so curious to know what your thoughts are and what you guys are thinking about.
Yeah, so I think there are things that we used to think about and we don't have to think about anymore. And then the opposite is also true. Things that we were not thinking about and now we have to think about. So for instance, if we look at our product development, about 45% of our code is now written by AI. So a lot of the workflows and the processes that we used to do sort of manually, PRDs, commits, bug fixing, and several other things, most of those are fully AI driven today. So that means that as a company and as a development team, a lot of things that we have to invest time into and worry about, and that would have a very clear trade-off against other things, are no longer a problem. Maybe we worked on and continue to work on those capabilities, but once you have that sort of in place and working to your advantage, then you kind of forget about those other problems or workflows altogether. And then on the other hand, some new things emerge, right? You tapped into fraud. So, usually what happens is that the fraudsters are usually faster than the market in terms of adopting these tools, right? So now you have to counter for those at a faster rate. And there's also new use cases when it comes to fraud or to, authorization management or scoring people or all these things. So I think sort of the fraud prevention game and then the sort of underwriting game are two that are definitely being enhanced by AI, and that's good. That's usually good. I think the pace at which they develop is very, very important, because businesses, can live or die based on that. And I think in relative terms, people are starting to pay a lot more attention to those now that they have freed up time from thinking in the previous examples that I gave. But yeah, it's developing really, really rapidly, and I think we'll be discussing about something completely different like in a month or two.
So, first off, I think fraudsters are actually the smartest people on earth. If you think about it, they always find a way. It doesn't matter what technology is being built or what's happening. There's always some people that see it as a challenge just to see like a dent in anything that's being built and how to get into that one. So I agree with you. I actually didn't think about this. I really like the perspective of, there are things that we have to think about that we didn't have to. And there are things that we're thinking about that we don't have to think about anymore. I actually didn't think about that one. I think it's going to be one of those revolutions that's not one that's going to disappear. It's not like the metaverse, right? That might come back sometime. Who knows? But it's obviously not here right now. So I'm actually quite aligned. I tend to be disagreeing with a lot of people on those topics because just difference of opinions, and like a lot of people think about the semantics, which are important, but not, okay, like where's the scale? If there is no scale, the semantics don't really matter. And so it's been actually quite interesting. Another topic, right, on the innovation is the stable coins and how that's increasingly intersecting with cards, right? With everything that you're seeing on your side of the spectrum, where do you see stable coins as the most valuable in terms of use cases today? We touched on it a little bit, but is it on the settlement, funding, remittance? What do you think that is?
So I think most of the value with stablecoins is not happening in the card networks or related to the card networks. I think it's mostly for B2B cross-border payments. So it does affect sort of positively remittances and money movements and all these kind of things. When it comes to sort of the cards world, what we're seeing, as we discussed before, is the networks starting to adopt that. To deliver more value to their own customers. It's usually coming in the form of settlement with stablecoins. Kind of the first tests are kind of going in that direction, and it's still not like fully mainstream and launched globally. They are doing some testing in some markets. So far, so good. And I think from that perspective, the value is, as we were saying before, that if you have your own treasury and your own operation is native in stablecoins, then you don't want to pay the FX fee to go to local currency or to American dollars and then settle in those currencies. You just want to do it sort of natively in your own currency, which in this case would be stablecoins and more specifically USDC for now. And so that ultimately generates better economics. And if you have better economics, you can have like a better company, a more profitable company, and or translate part of that economic value to your user in the form of, some sort of reward, discount, loyalty program, or simply sort of better prices in the financial services that they consume. So I think, this distinction needs to be made between, where stablecoins are being most useful and how, the cards sort of ecosystem and networks are leveraging them. But either way, they are obviously, our reality and part of the financial system. Some people argue that it's like a parallel financial system sort of built for the internet, and it's native to the internet. And anyways, but that's kind of down to semantics. The reality is that they are part of, how we live and how we operate, and definitely, pushing things forward. So definitely net positive.
There's a massive adoption right now in terms of both the networks and the largest financial institutions in adopting the technology. I think one of the biggest use cases is global treasury. It's being able to move money, especially for like your biggest clients, in between your own different accounts, like seamlessly 24/7. Then there's payments and payouts, but those are different ones. And once you see kind of banks already adopting it and the networks already adopting it, and now all of the other type of providers that are also adopting the technology, I think it's not a change. I mean, in a way it kind of is. It's not the prior infrastructure versus the new one. I think there's going to be a hybrid, and then over time, right, you will see, hey, like this makes more sense. Okay, it's adopted there. Hey, that doesn't make more sense. It's not adopted there. So I'm very much in agreement. I was going to ask you another question on that front, but I think we've talked enough about stable coins right now and LATAM. I could probably spend another hour on this, but I'm gonna try to avoid it for the audience. I wanted to do a quick fireside round with you before we go towards closing. So I'm gonna start a sentence, and I want you to kind of complete it. You ready?
All right, let's go. I'll try.
All right. Cards in 5 years will be?
Fully tokenized, I think.
Okay. LATAM's FinTech's biggest opportunity is?
Going regional and global.
Okay. And the one thing that founders underestimate in FinTech or in general?
How hard, local regulation is, and how much asymmetry is there between different markets. So ultimately, when you're expanding a business, doing more than one country is extremely difficult.
If we zoom out, Pomelo has built, as a local champion, an incredible fintech platform as a whole that is a card provider, but provides a lot more. And I think it will continue to do so. Different rails, obviously different products, different regions, expanding and going deeper into those, embedding the new solutions, also embedding the new technology that your clients and merchants are driving, which I find extremely exciting. Congratulations on the Series C. I think that's an insane milestone. A lot of people would want to be able to say the same thing that what you're doing. Hopefully, I'll see you next week. Any last words on what you would like Pomelo, I guess, to achieve in 2026 and beyond?
Oh, well, thanks for having me. It was great fun. Congrats to you too on all the success and the progress in the last year or two since we first met. I think you put it down in a correct way. I think we're kind of going from a cards centric company to a multi-rail company that's going to start offering a lot of value beyond LATAM, while we continue to be very much focused in our LATAM customers as well, or any other customer that wants to do business in LATAM. Pretty excited about the future. It's rather complex, but that usually requires more infrastructure, and that should be good for us. So we'll see. Hopefully we can do another episode in a year or two and see where we are and where we're headed.
I have a feeling we'll do one, and then hopefully it's in Argentina and we can grab a steak and a beer.
Of course, you're more than invited here.
Sounds good. I'll talk to you soon. Thank you so much.
Thank you, Arthur. Take care.
Everyone.
Bye-bye.